Welcome to the binary options dance floor, where prices sway and twirl like seasoned dancers. In this grand ball of finance, it's not the rhythm of music, but the rhythm of the market that guides the dance. Binary options is a unique form of trading, a dance with the market where you predict the pirouettes of prices within a set period. It's like a waltz. You anticipate your partner's next move, your partner being the market in this case. If you can keep in step with the market's moves, you lead the dance. But this dance is not just about grace and rhythm, it's about precision and timing. Just like in a dance, every step in binary options has to be taken with careful calculation and precision. You decide the direction of the market. Will it rise, will it dip? And then you place your bet. The thrill of binary options lies in its all-or-nothing nature. It's a high-stakes dance-off where you either take home the prize or leave the dance floor. If your prediction hits the mark, you win, earning a payout. However, if your prediction falters, you lose your investment. There's no middle ground, no room for almost right. It's a binary world after all. But don't let the risk deter you. Like any dance, the binary options dance can be mastered with practice and the right strategy. Learn the moves, understand the rhythm of the market, and you could be twirling in the profits. So will you take the dance with binary options? Remember, it's all or nothing. The floor is open, the market is waiting. Will you step in and take the lead, or stand by the sidelines? The choice is yours. The dance of binary options is a thrilling high-stakes dance with the market. It's a dance that promises potential rewards, but also demands your attention and caution. So put on your dancing shoes and get ready to sway with the rhythm of the market. Next, we step into the bustling currency carnival, also known as Forex. Picture a bustling global fair where every country presents its currency, each one unique with its own story to tell. The Forex market, the world's largest financial bazaar, is where these currencies take center stage, performing a continuous dance of exchange. Now imagine trading these currencies like collectible cards. You focus on the shifts in their value, the ebb and flow of their worth, and you make your play. It's a thrilling game of prediction, strategy, and timing. Like any carnival game, it's a mixture of skill, luck, and knowing when to take your shot. In the Forex market, time never stands still. It's around-the-clock, 5 days a week extravaganza. The sun never sets on this currency carnival. As one country's market closes, another's opens. It's a rolling wave of activity, a never-ending cycle of buying and selling, a constant hum of transactions. The currencies themselves are like the carnival's main attractions. Some are crowd favorites, like the US dollar, the euro, the British pound. These are the major currencies, the ones most commonly traded. Then we have the exotic currencies, the ones less frequently traded, yet offering their own unique opportunities. In this ever-evolving dance of currencies, the shifts in their value are what matter. Economic factors, political developments, market sentiment, all these can cause currencies to rise or fall in value relative to each other. These value shifts are what Forex traders aim to predict and profit from. But remember, this isn't just a game of chance. It requires understanding, analysis, and a keen eye for detail. It's about recognizing patterns, anticipating movements, and making calculated decisions. It's about knowing when to join the dance and when to sit one out. Forex, a carnival of currencies, where the party never stops. It's a place of endless opportunities, a market where fortunes can be made and lost. So step right up, join the dance, and see where the rhythm of the Forex market takes you. Ever dreamt of owning a piece of a big company? Welcome to the world of stocks. Here, you can become part owner of businesses you've always admired. It's like buying a ticket to the corporate world, where you get a front row seat to the company's performance. You see, when you buy a stock, you're buying a small slice of that company. It's like owning a piece of the pie. But here's the exciting part. As the company grows and makes profits, your slice of the pie grows too. This can lead to a sweet payout if you decide to sell your shares, or if the company distributes dividends. But it's not just about buying and holding. Trading stocks is like a game of chess, where the pieces are companies and the board is the stock market. You need to strategize, planning your moves based on market trends, company performance, and economic indicators. You might find yourself buying stocks when their prices are low. Perhaps the company has hit a rough patch, or the overall market is in a slump. This is like buying a ladder at a discount store. You're investing in its potential to reach higher, anticipating that the company or the market will bounce back. On the other hand, you might sell stocks when their prices are high. Maybe the company just launched a successful product, or the economy is booming. This is like climbing to the top of that discount ladder and reaching for the golden apples of profit. But remember, the stock market is a roller coaster ride of ups and downs. Sometimes you have to slide down the ladder to climb higher. It's all about being patient, staying informed, and making strategic decisions. So, are you ready to join the corporate world, even if it's just a tiny slice of it? With stocks, you don't need a fancy suit or a corner office. All you need is a bit of money to invest, a keen eye for opportunities, and the courage to climb. With stocks, you climb the corporate ladder, one share at a time. Welcome to the Earth's treasure chest, the commodities market. Here, we don't just trade goods, we trade pieces of the planet. Imagine walking into a global marketplace, where the stalls are brimming with treasures that Mother Earth has to offer. From shimmering gold to barrels of oil, bushels of wheat to bales of cotton, commodities are the raw materials that power our world. Now picture this. You're not just buying these goods, you're trading them. You're predicting how generous Mother Nature will be, and how much the world will demand these resources. It's a delicate dance between the forces of nature and human needs, and the rhythm of this dance determines the price of these commodities. Take gold, for instance. It's not just a shiny metal that we use for jewelry, it's a haven for investors during turbulent times, a hedge against inflation, and a measure of wealth that has stood the test of time. When you trade gold, you're not just trading a commodity, you're trading a piece of history, a symbol of stability in a world that's often anything but. And then there's oil, the lifeblood of our modern world. It powers our cars, heats our homes, and is a key ingredient in countless products we use every day. When you trade oil, you're trading the energy that fuels our lives. But you're also trading on geopolitical tensions, technological innovations, and even weather patterns that can impact production. Similarly, agricultural commodities like wheat and cotton are not just about farming. They're about weather patterns, technological advances in farming, and global consumption trends. When you trade these, you're trading the very food we eat and the clothes we wear. In the commodities market, you're not just a trader, you're a fortune teller, a weather forecaster, a geopolitical analyst, and an economist all rolled into one. It's a thrilling, sometimes unpredictable journey through the Earth's treasure chest, and that's the beauty of commodities. They're not just abstract numbers on a screen, they're real, tangible pieces of our world. When you trade commodities, you're not just making a financial investment, you're engaging with the world in a very real, very tangible way. Commodities, where you trade pieces of the planet. Fasten your seatbelts as we delve into the digital realm of cryptocurrencies. Picture this, a modern-day gold rush. But instead of pickaxes and gold pans, miners are armed with powerful computers and complex algorithms. Intrigued? You should be. Cryptocurrencies, or crypto as they're often called, are a new breed of digital assets. Born out of the technological revolution, they represent a fusion of finance and technology. They're not just a means of exchange, they're a whole new way of thinking about what money can be. Now, you might be wondering, what on earth is crypto mining? Well, let's break it down. Unlike traditional currencies, which are issued by central banks, cryptocurrencies are generated, or mined, by solving complex mathematical problems. This process is carried out by powerful computers, which validate transactions and add them to a public ledger called the blockchain. Think of the blockchain as a giant decentralized accounting system. It's a record of every single transaction ever made with a particular cryptocurrency. And because this ledger is stored on thousands of computers around the world, it's incredibly secure. No one can tamper with it without everyone else noticing. This makes cryptocurrencies resistant to fraud and counterfeiting, a truly revolutionary concept. But that's not all. Cryptocurrencies are also decentralized, which means they're not controlled by any single entity or government. This gives them a level of independence that traditional currencies just don't have. It's like being your own bank. And just as the original gold rush sparked a wave of innovation and economic growth, so too has the advent of cryptocurrencies. They've opened up a world of possibilities, from instantaneous global transactions to smart contracts that execute themselves. But remember, just like the gold rush, the world of cryptocurrencies is also fraught with risk. Prices can skyrocket one day and plummet the next. It's a wild, unpredictable frontier, but for those who are willing to take the risk, the potential rewards are enormous. Cryptocurrencies, a new age gold rush in the digital world. Love variety. ETFs offer a buffet of investment options. Just as a buffet invites you to sample a bit of this and a bit of that, exchange-traded funds, or ETFs, allow you to dabble in a diverse range of assets, all within one tidy investment package. Think of it this way. Instead of ordering one dish from the menu, say a single stock or commodity, an ETF is like a combo platter, allowing you to enjoy a variety of items together. You get the freedom to fill your plate with a mix of stocks, bonds, commodities, or even a sprinkling of real estate. The beauty of ETFs lies in their inherent diversification. You've likely heard the age-old wisdom, don't put all your eggs in one basket. Well, ETFs take this advice to heart. By spreading your investments across different assets, you mitigate the risk of one underperforming asset dragging down your entire portfolio. But that's not all. ETFs also offer the convenience of trading like a stock. You can buy and sell them throughout the day at fluctuating prices, just as you would with individual stocks. This combination of diversity and flexibility makes ETFs a popular choice among investors of all experience levels. Moreover, ETFs often come with lower expense ratios than mutual funds, making them a cost-effective way to diversify your portfolio. It's like getting a buffet meal at a discounted price. So, whether you're a cautious investor seeking to mitigate risk or an adventurous one looking to explore a variety of investment avenues, ETFs offer the perfect blend of variety, flexibility, and affordability. They're a way to sample the world's financial markets without having to invest in every single asset individually. Remember, a well-balanced meal is key to good health, and the same goes for your investment portfolio. Diversify with ETFs to ensure you're not overly reliant on the performance of a single asset. ETFs, a balanced meal for your investment portfolio. Finally, let's check the pulse of the market with indices. Now, what are indices, you may ask? Picture yourself as a doctor, but instead of patients, you have the entire economy on your examination table. Indices are like the heartbeat monitor, giving you a reading of the market's health. They represent a collection of stocks from a particular market or sector, like a snapshot of a party, capturing the mood in one shot. If the party is lively, the index is up. If it's a snooze fest, the index is down. It's as simple as that. But it's not just about watching the party, it's about understanding the trends. Are people leaving the party early? That could indicate a downward trend. Or is the party just getting started? That could signal an upward trend. Indices help you spot these patterns and make informed decisions. And why does this matter? Well, imagine sailing in an ocean. Would you rather have a compass that shows you the general direction, or would you prefer to sail blind? Indices are your compass in the vast ocean of investing. They guide you, helping you navigate the waves of the market. Now, some of you might be thinking, why not just focus on individual stocks? That's like trying to understand the ocean by studying a single drop of water. Sure, you might get an idea, but will you understand the full picture? Indices provide that broader perspective, allowing you to see the forest for the trees. So, in the grand scheme of investing, indices are your trusty guide. They help you understand where the market is heading, providing you with the necessary insights to make strategic decisions. They are the pulse of the market, the heartbeat that keeps the financial world ticking. Indices, the heartbeat of the market, always keep your finger on it. Because just like in medicine, early diagnosis can be the key to successful treatment. And in the world of investing, early trend detection can be the key to profitable investments.